Welcome back to Self-Invested, where we talk about how you can do better with money. As you can see from my settings, I've been banished to the bedroom. So the lighting and the setup's a bit different for this video, but hopefully you still find value in it and it's not too much of a distraction. In this video, I'm going to be talking about Nationwide's new helping hand mortgage, which will increase the amount that first-time buyers can borrow by 22%, by increasing the amount that they can borrow against their salary to 5.5 times their salary instead of the typical maximum, which is 4.5 times a salary. I'm getting to this a bit late because this was announced about 2 weeks ago, and the mortgage was actually launched last Monday before last, on the 26th of April. But I thought it was probably worth covering because I realized from a comment I responded to on another video that some people may have not heard of this product. The only thing is that there's probably going to be limited availability on the scheme, and I'll explain why later on in the video. Before getting into this video, I should probably mention that I'm not a financial or mortgage advisor. I'm just a regular guy that researches these topics and shares what I learn. So if you need financial advice, then it makes sense to get a suitably qualified person to give you advice on your specific circumstances before you make any financial decisions. Also, if you enjoy this video or you find it useful, then make sure you give it a like because it helps the video be seen by more people and it also helps this channel to grow. Now, before I cover the criteria of this mortgage, I'm just gonna quickly give an example of how this mortgage can increase the amount that you can borrow. So say, for example, you were earning 50k as an individual or in a couple, so your joint incomes combined to 50k. The maximum you'd typically be able to borrow would be 4.5 times your salary, which would be equal to £225,000. But with the helping hand mortgage, you would be able to borrow 5.5 times your salary, which means the maximum that you'd be able to borrow would increase by 50,000 to 275,000, which is 22% more than you would normally get with a typical mortgage, which is quite a lot more and can help to bring you a lot closer to your goal of buying a house. Now, as you can imagine, for this product, it has a number of eligibility criteria. And the first is that you need to be a first-time buyer. But according to Nationwide, a first-time buyer is just somebody that hasn't had a mortgage in the last 3 years. Now, this is important because it means that Nationwide's definition of a first-time buyer is not as restrictive as HMRC's definition, which is used for the Help to Buy scheme and stamp duty exemption, and so is going to be available to a lot more people. And I've seen people talking about this product only being available to first-time buyers, but not defining what Nationwide see a first-time buyer as. And I think this is going to be very helpful to many people who thought they wouldn't be eligible for this scheme. People that had previously owned a property but haven't had a mortgage in the last 3 years. Now, the next criteria is that this product is only available with a 5-year or 10-year fixed rate mortgage. This means that mortgage rates are likely to be higher than mortgages with an equivalent loan to value ratio but a shorter initial deal period, such as a 2-year fixed rate mortgage or tracker rate mortgage products. The next criteria is that if you are buying a second-hand house or an existing house, you need to have a 10% deposit, which means the maximum loan to value you can borrow is 90%. If you're buying an existing flat, the maximum loan to value you can borrow is 85%, which means you need a 15% deposit. And if you're going for a new build house, then the maximum you can borrow is an 85% loan to value ratio, and this means that you need a 15% deposit. But if you're buying a new build flat, then the maximum loan to value you can borrow is 75%, and this means that you'll need at least a 25% deposit. Now, that's something that's really important. This means that this scheme is more geared towards existing houses or existing flats, and if you're going for a new build flat, you're going to need quite a large deposit in order to make use of the scheme. The next criteria is that you need to have a minimum income of 31,000 if you're a sole applicant, which is around the average income of a full-time employee in the UK, as we found out in my last video on Help to Buy. And for joint applications, you need to have a combined household income of at least 50k, which I don't think is too high. It's less than double the average income. The next criteria is that the maximum mortgage you can borrow is £500,000, which means you would need to jointly earn around £91,000 in order to borrow the maximum mortgage available with this product. There are also some exclusions which are worth noting. The first is that self-employed income for applicants will not be considered. So if you are self-employed and that's your main income, then it's not very likely you'll be able to take advantage of the scheme. And also, if you are in full-time employment but you have a side income which is self-employment, then they won't consider that as part of the 5.5 times amount that they will lend you. The next is that this mortgage cannot be used in conjunction with any other scheme or non-standard type of ownership, such as shared ownership, the Help to Buy scheme, or Right to Buy. And it probably goes without saying that this product is only available for residential properties. You can't use it for buy-to-lets, and so you can't get an interest-only mortgage. Now, I mentioned earlier in this video that the availability of this product is going to be limited, and this is because Nationwide has only set aside £1 billion for this type of mortgage. Now, £1 billion may sound like a lot, but £1 billion is only equal to 400 mortgages at £250,000, which isn't a very large mortgage and is not a very large number of mortgages. So if you're interested in this mortgage, then it makes sense to talk to your mortgage broker and act quickly to try and take advantage of it, because it's very likely that this is going to be in high demand and that £1 billion will run out quickly. Well, this product, unlike the 95% mortgage guarantee scheme, benefits people that have saved up a big deposit but are struggling to borrow enough money to buy the property that they want. This is the opposite to the 95% mortgage guarantee scheme, which is helping people that are struggling to save a deposit but have a big enough salary to get the mortgage that they need to buy. But I think Nationwide's product is likely to help more people, because I think more people are in a position where they're not able to borrow enough money to buy the property that they want. However, although I think Nationwide's product is likely to benefit more people, I do think that if similar products become more available and other lenders start borrowing 5 times or 5.5 times people's salaries, that we're just going to end up in the same position, because house prices usually follow how much lenders are willing to lend. The more that lenders are willing to lend, the more that house prices will increase, and we'll just end up in the same position that we're in now, where people aren't able to borrow enough to buy the properties that they want. With 95% mortgages, I don't think that this is likely to increase house prices in the same way, because people are not able to take out more money with 95% mortgages. If anything, they're actually coming to the market with less money, because instead of a 10% deposit, they're only going to have 5%. Although it may increase demand because it reduces the amount people need to be able to secure a mortgage, it doesn't actually increase the amount that people will be able to spend. And so I don't think the pressure on house prices moving up will be as great as the 5.5 times mortgages if they became more widespread. Now, one key thing that I think is worth considering if you're taking out this mortgage, and something that you should probably speak to your mortgage broker about, is what the outstanding mortgage is going to be at the end of your initial deal period. So if you take out a 5-year fixed rate mortgage with the Helping Hand product, or a 10-year fixed rate mortgage with the Helping Hand product, then I think it makes sense to speak to your mortgage broker about what the outstanding mortgage is going to be at the end of that deal. Because if that amount is more than 4.5 times your income, you may be in a difficult position when it comes to the end of that initial mortgage deal and you want to remortgage to get a better interest rate. You may just be stuck on Nationwide's standard variable rate, which may end up being more expensive than the rate you were paying previously. Now, I haven't done the numbers on this, I haven't run the numbers on this, but it's just something I thought about while I was recording this video, and I thought it was worth mentioning. Now that brings us to the end of this video. If you enjoyed it, please give this video a like, and if you haven't seen my video on the 95% mortgage guarantee scheme, make sure you give it a watch. That's a scheme that helps people that are struggling to save for a deposit but have a big enough salary to get the mortgage that they need to buy. Also, check out my video on the Help to Buy scheme, which also increases the buying power of first-time buyers. Anyway, take care, and I'll see you in the next one.